Yes. So, continuing on with indicators. So, we went over the RSI, that the RSI out of the box is really good for calling the tops. Let's look at Roku. It's so good, in fact, and often the anchor point to price moving sideways or down, that we use it to take profits, and we use it for profit targets. And you can see when the RSI gets extreme, price tends to pull back to the 20. RSI extreme, price pulls back to the 20. RSI extreme, price pulls back to the 20. This is Roku. It's one of my favorite trading stocks. What did we see today? We see Roku breaking the box that had been established. Price closes under the 20. And then today opens, and what does it do? Breaks the box. And I get stopped out. Now, what I want you to understand is the RSI had already gone extreme, giving us what was probably the stage 3. Now remember, a stage 3, and there's not much difference between a stage 3 and a stage 1. This became a stage 1, and it broke out again and then ran up. Stage 3, if it doesn't go down, just continues on, then breaks out again, or continues on and breaks out again, that stage 3 becomes a stage 1. Make sense? So it doesn't have to go down, but here we see the stage 3 become a stage 4. And it's actually confirmed when this happens. That never happened over here, okay? Because the moment, and we're going to get into this when we talk about moving averages, the moment the 20-day moving average went flat, it no longer had any value, okay? We see that happening here, but price broke the box support. I'm hoping you see, and we'll clean this up. While we're here, let's talk about the box for just a second. And I'm going to come back to these things so that it's super, super clear. Do you see the box? See the box? See them? Sometimes they're not as clear. The anchor point is almost always the corner. It's the corner of the box. And what I mean by anchor, you drop the anchor and it goes sideways. Drop the anchor, goes sideways. So now we're breaking down. We broke support of the box. The reason the box is important is as long as price stays in the box, then we know this stage 3 may not become a stage 4. It may just become a stage 1 and break out again. A good indication of that is it just keeps going sideways. It doesn't ever break down. And we see it. Look, it held the box here for over a month. This one didn't hold the box. It's breaking down. So it's going to come down. Where's it likely to come? Previous resistance. Probably right around in there. Maybe down in here. So price is moving down. Stage 4 decline. See it? Stage 1, stage 2, stage 3, stage 4. RSI, mark the top. So we've been going through the RSI. Now we're going to talk about the TSI and the MACD. Now, if you trade a trading platform that doesn't have true strength index, that's okay. You can replace this with the standard lines of the moving average, the MACD crossover line. If you notice, all I have on the MACD is the histogram. Well, normally they'll be plotted, and here, let's see if we can pull it up. So you see, this is more likely what you're to have if you don't have stock charts. See where it says MACD histogram? So we're going to add just the regular MACD. See it? See, it says 12.26.9, same as the histogram. Histogram is the visual histogram of this. But let's put that on there too. Now what do we see? See the MACD down here? It says MACD. This is what most of you are going to have. I just have the histogram, and then I use the TSI. If you notice, the TSI crossover right there, if we go down, is basically the same as the MACD. I've just been a long time user of the TSI, so I keep using the TSI. So we'll get rid of this. But both are fine. They both do the same thing. Most indicators are doing the exact same thing. They're a math calculation of price. They're taking price, the high, the low, the distance, and they're creating some sort of something out of the price, okay? All indicators are derived from price, and they're trying to indicate or direct the future. But here's what I want you to see. The power of the MACD is in two parts. One, the crossover. The crossover is a really good time to sell some shares if you've had a good run. So here was our breakout. We ran up, got a signal to sell some right here. And then as we began to move sideways, you almost always get the rollover. And so a lot of times I used to do, I would buy on the breakout, I would sell some, and then now I'm selling the last. But right here, when this is triggered, look, I've sold shares. I don't have that many shares, so this big down move wasn't as big a deal because I bought in, I got out, and now I'm getting out, and I'm down to like either a core or maybe 5 shares or something like that. You can trade around a core position, but if you're going to do that, you need to sell a sizable amount. So you need to be down to not that many shares as you come down. And look, the MACD gave you ample time to do that. You can't just use the MACD though. Look, crossover, that was the breakout. And then right here it says sell. Well, we're not selling right there. Why? We're using the money flow. It's still above the 20. It's still above stage 1. So this signal would be ignored. Why? Because price is king. And price broke out. It's still holding the 20. It's still above the stage 1 base. And it broke out. It pulled back. It's still good. You would then ignore this signal. The signal we're looking for is after it rips. Now we're looking for a signal. So you see how we put it all together? First and foremost, price is king, right? And then what stage are we in? That's king. And then where are we in stage 1, stage 2, stage 3? So up here we're in stage 3. How? We know because it had run up. We know because it's going sideways. We know because the RSI went extreme. And we know because the MACD rolled over. This is now a stage 3. And then once support or the box was broken, that confirmed stage 4 decline. Do we buy a stage 4 decline? Absolutely not. Now what do? We wait. What are we waiting for? For a price to stabilize. See, over here, it went below the 20, but look, it never broke the box. This broke the box. Let's check in on Square. These are all in real time. What did the MACD say on Square? Well, it rolled like right there. So let's see, where is that? Look where it rolled. What happened first? RSI touched the extreme, right? And then what? That was the top. And then the MACD rolled. What did that tell you? Time to lock in some gains, right? What happened last time it rolled? Right here. What happened last time it rolled? Right over here. Now that one, remember, price stayed above the 20. We ignore the one where price stays above the 20. Actually, no, on this one, you would have taken profits. It kept going sideways. Look, RSI extreme. This is a runaway. This is a massive runaway. As long as price is still printing above the other side of this 20-day moving average, which is this green line, and we're going to get into that, you stay long, okay? You don't talk yourself out of this. And then we're rolling over. Now look, price is on the other side. Look at the, and what are we watching for? What's the first sign that maybe we're at a bottom? RSI will go extreme. Well, that could be down here, which would what? That kind of makes sense, wouldn't it? Previous level of support. See it? So if price comes down into here and stops, how we know? Well, first thing we're going to get is an anchor point. And then it's going to what? Start going sideways. And then what's going to happen? The histogram's going to turn up. And then what's going to happen? The MACD is going to roll over. See what I'm saying? ADX is going to go positive. All of these things are going to line up just like it did over here, which is too far over now. But the same repetitive pattern will occur over and over and over. Let's go to OPK. OPK. RSI hits. Became our anchor point. Once you establish an anchor point, you can probably throw your resistance line. We found our support. It was right here, still above the 20. Long as price holds that, we're good, we're good. And then what happens? Boom, broke it. That's our stop. We're out. Stage 1, stage 2, stage 3, anchor point. And then what? MACD rolled over. MACD gave us heads up right in here, right? So we should have taken profits off of this trade. And now what? Now we're going down. Where's it going to go? Probably down into here. So, right around in here. And then it'll stop. Hopefully. If that doesn't stop, what happens? It goes to the next one. Probably right around in here. Come down into there. And this will be down. And this will be down. And down. And down. And look, the momentum. We talked about this. See the histogram? When this starts going sideways and the histogram goes the opposite direction, what is that telling you? Momentum to the downside is ended. It's ended, at least for now. And we can see that on price. And what is that, the first line? That's the first line of an indicator that the new stage is being built, stage 1. And then look at the crossover. Look, the crossover, it was right in there. That stage was confirmed when the MACD crossed. This stage is confirmed when the MACD crosses. This stage was confirmed when the MACD crossed. Like when that crossed, that's telling you this is a stage 3. We can pretty much assume it's a stage 3. We can do this just stock after stock. Some of them aren't going to be as pretty. You can get some shit like AT&T and it's just all wacky. Look, see all of this? What does that tell you? Nothing. It's not tradable. Look, sideways, nothing. Junk, junk, junk. There's nothing you can, there's no edge there, okay? No edge. So keep that in mind. Once the indicators go sideways, they're of no use, okay? What's something else? MCRI. Let's look at WIN. Back in the box, GRPN. Let's look at Groupon. We're in Groupon. Remember we got in this on the breakout. It was a stage 1 / stage 2. It started to do a stage 2 because it broke out. But what are we trading on? We're trading on the stage 1. Price is moving sideways. Placed our stop here. Now what do we see? We thought we were going to see it move, but we haven't. Histogram's bullish, bullish. So things are coming together. This trade is still kind of weak though. 1850, we're out. If we get stopped out at 1850, that was a good trade. And you say, well, you lost money. Why is that a good trade? Because you honored your rules. That was the fucking plan. You planned it. You entered it. You set a target. What? Previous high, first target. You set a stop loss. And whichever one is hit, whether it be the target or the stop, that was the plan. Executing the plan is the goal of the trader. The goal of the trader is not to make money. You don't know if you're going to make money. You don't have any idea at all if price is going to go up or go down. You don't know. We're just trading a pattern. We didn't know when we bought this after moving sideways, coming off a downtrend. We didn't know if it'd go up. Maybe they miss earnings and it goes down. I don't know. But that same pattern is setting up. What do? Set my targets. That's called trading. There's no certainty. No one knows. But I know what it looks like before it goes up. It goes sideways. And I know the market moves in 4 stages. And I can see them very clearly. Sideways up, sideways down, sideways up. I can see it. How far up, how far down, I have no idea. And neither do you. You have no idea. No one you know has any idea. No one you read about has any idea. No hedge fund, not Jim Cramer, nobody. And the moment you understand that, it's liberating, dude. It's liberating. Same spirit is in you, same stock market, same stock charts as in Jim Cramer or Ray Dalio or any of these other people. Look, RSI calls the top. You needed to go to Harvard to see that? Do you need to go to Harvard Business School to look at this and go, wow, that looks kind of toppy? And then to see the top and the box, you need to go to Harvard to see this box forming? I don't think so. You need to go to Harvard to see price breaking down out of the box below the 20, and then what happens? Down, 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 down. And then what? Starts to go sideways, right? You didn't need to go to Harvard for that. You need to go to Harvard to see that happening right now in Facebook. Prices breaking below, breaks out of the box, breaks below the 20. So I don't think so. Look at Twitter. Not a real big box, but it's now broke. What is this? What is this now on Twitter? Stage 4 decline. Where's Twitter probably going? Where's the next level? Broke that one, right? So probably going down to this one, about right in there. Why is it kind of in the middle there and not? This is not perfect science. That was a top, and then kind of a bottom. So right around in that zone. So we can expect it to come here. The RSI should be near extreme. And then what? We'll watch and we'll wait and see, does it go sideways? If it starts to go sideways like it did here, that probably means it's a bottom, right? Trying to think of some other stocks we got going here. Where's gold? Stage 4 decline. Stage 4 decline. So if you're looking at this, gold, in order to do an uptrend, has to go above the screen line. These moving averages have to come up. What do we see right now in the MACD? It just issued a sell signal. See it? What happened last time it issued a sell signal? It was right around in here. Price went down. What about over here? Didn't go down, it went sideways. So not infallible, right? But it does give us indication, hence the term indicators. And so we got to learn to look at all of them together, like in court, like evidence. Where's the RSI? What stage is the stock in? Where's the and this one is getting hard to read. Like it's not giving us clear indication. It's actually starting to move into a giant box. See it? Which is a really large trading range. We'll see what happens. You see how that happened over here? What did we need? We needed it to break out above it. And what happened when it did? It ran. Just FYI, when you're sitting on an extreme RSI and you get what I call a Jesus cross and candles, they call them dojis, that is always the top. Literally almost always. Same on the bottom. If you have an extreme RSI and you get this, whether it be on top or bottom, if it's on bottom, that's your bottom. If it's on top, that's your top. See it in gold, and then what happened? It came back. Let me show you in polar. Let's take this down. See it? Down, 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 stops, does the Jesus cross, and then that was the bottom, and it rips higher. You know, I could show you these on chart after chart after chart. I don't trade just on that, but just be aware that those are usually reversal candles. Again, an indicator or indication that it's possibly done. But, I mean, do you see it on this one? See the sideways? This didn't go sideways. It got ahead of us. ABVV, recent one. Got long this. Why did I get long this? Back in the box. Remember we talked about that in previous ones? It got back in the box. Super bullish. Look at that. It broke the box. I got stopped out for a loss right here. Swing trading. It stopped, and look at that. It's almost a Jesus cross or a doji. And then what happens? Rips higher. What do? I'm back in the trade. Why? It's bullish. That's crazy bullish. Here's my target. Get my money back. This is where mindset comes in. What happens if this comes down and I get stopped out again? I get stopped out. And what happens if it jumps back up? I get back in it. At what point do you give up? Most people do that 2 or 3 times and, they're done. That's it. That's all they got in them. Can't take it anymore. I've been stopped out 6, 7 times in gold to then watch it do a massive 3-month run and I make a ton of money. Can you take that? Getting in and out and in and out and in and out. Can you handle that? If not, you're not a trader, which is fine. You don't have to be a trader. You could just be a buy and holder. You could just use this system to help you in your buy and holds, timing these bottoms. So if we're looking at Intel, look what happens. Look what happened today. We got our first candle. And also notice what happened. You see it? It ticked that way. The momentum has stopped. See it? And look what happens. We went sideways. It's only 2 candles, not enough for me. I need 2 or 3 more. If I was swing trading, this would be my target. If I'm a buy and holder, now's the time to buy. Why? Because I'm catching the bottom. So I wouldn't even begin to try to buy the bottom until this went extreme and this stops and this goes this way. If you're doing buy and hold, you don't need 4 or 5 candles. You just need a candle to stop and the momentum to go this way and the RSI is extreme. Now you buy some shares. And if you do it all the time, you're buying bottoms. Be right here. Right? And so you're buying bottoms and not tops in your stocks. Look at Southern. Do you want to buy up here? No, that'd be dumb. You want to buy down here. See the RSI difference? RSI is high, RSI is low. What's the difference? Price is low. See it? So if we're looking at the histogram, what do we want the histogram to do? Well, on a big sell-off, we want it to go the other way. On a big incline, what happens when it starts going this way? Tried to run again, but then what happens? What is that telling you? The momentum was over. So when you have histogram going this way, you have the RSI extending, and now price closes below the 20. What does that tell you? Well, evidence. Evidence. Price below the 20. RSI, sell signal. MACD, rollover. Histogram, down. Stochastics, down. ADX, crossed. All 6 signals of the money flow trading system are saying down. So if you bought here and you've run up on this big thing, what do you need to be doing? Locking in profits, if that's your plan. Or at least not buying. You wouldn't buy this. Why? You wait for it to fall and set up. What's happening here is it's topping out. It's topping out. Look, stage 1, stage 2, stage 3. Now we're going into a stage 4. Where will it fall? I don't know. Probably right around it. I mean, who knows? I have no idea. Could come into here. Could come into here. Maybe it stops at the 200. I don't know how long stages last. I just know what they look like when they end. And if I know what they look like when they end, then I have a better option or a better shot at buying into them. Make sense? And timing my entries. So the histogram, what you're looking for is when it goes the opposite way. You're getting divergence. So look, price drop, and then right around in here, right, it stopped going down. Look what happened. What happened right around in there? The histogram went the other way. Look. See it? It gave you heads up. When the MACD crossed, that's your second signal. When the moving averages cross, that's another. Okay? And they're not all perfect. You see that. This one, it didn't work out perfect. They came back down. Didn't work. But all of these moves look exactly like that. Look exactly like this one over here. So in other words, they're not all going to work. Nobody can get them all to work. But they all look the same when they work. Does that make sense? So yeah, people say, well, you can't buy the bottoms. No, but I can buy every bottom. because all bottoms look the same. And I can buy all breakouts because all breakouts look the same. So I hope that helps about indicators, how we're bringing them together like a recipe around price and around the 4 stages of price movement and around the box. So